Hey guys, let's talk about how to begin investing in real estate with no money. Let's get started. So, there are a few ways to begin investing in real estate with little to no money, and I'm going to go over them in this video. If you have some other ideas on investing with no money, feel free to comment below so I can see your ideas and maybe make a video on it. Also, thanks again for going ahead and liking this video. Go ahead right now. Turn that thumbs up button blue. Thanks. Now, let me get into it. Real estate partnerships. A real estate partnership refers to a business structure between two real estate entrepreneurs who have decided to work together in a professional environment. I don't really understand. Well, okay, so here it is in its simplest form. It's pretty much just two or more people working together in real estate to achieve a similar goal. Okay, it's partners. Okay. A real estate partnership is a great idea for those who may have some gaps in their knowledge or experience or even in their wallets. If for nothing else, a truly great partnership can easily be the one thing a new investor needs to get started off on the right foot. Here are a few of the benefits associated with real estate partnerships. The right partner can bring extra resources to the table, including essentially, a good partner can bring something to the table that you may not be able to at the moment, whether it's access to capital or market experience. This being said, partners are not meant for everyone. There are some things that you need to consider before you invest with a partner. Challenges such as earnings must be split between partners. Real estate partners may have a very different management style, leading to organizational conflict. If a partnership agreement is not entirely clear, there may be issues delegating the responsibilities. Partnerships could be placed in unnecessary strain on otherwise healthy relationships. In some cases, one partner may bring more to the table, creating a strain in the equity or skills. How do you mitigate these conflicts? Well, the best way is to establish a clear agreement before jumping into a partnership with each other. Okay, that's good advice. Thanks. Keep in mind, a successful partnership does not happen overnight. Successful business relationships may take time to develop. While they can be highly beneficial for some, partnerships are not necessary to run a successful business. Weigh the pros and cons before committing to a real estate partnership and choosing what is right for you. Hard money or private money loans. A hard money loan is a type of loan that is secured by real estate property. Hard money loans are considered loans of last resort or short-term bridge loans. These loans are primarily used in a real estate transaction, with lenders generally being individuals or companies and not banks. Hard money loans have terms that are based mainly on the value of the property being used as collateral, not on the credit worth of the borrower. Since traditional lenders such as banks do not make hard money loans lenders are often private individuals or companies that see value in this type of potential risk venture. Hard money loans may be sought by property flippers who plan to renovate and resell the real estate that is used in collateral for refinancing, often within 1 year, if not sooner. The higher cost of hard money loan is offset by the fact that the borrower intends to buy off the loan relatively quickly. Most hard money loans are for 1 to 2 years. Some pros would be the approval process for hard money loans is often much quicker than applying for a mortgage or other traditional loan through a bank. The private investors who back the hard money loan can make decisions faster because they often don't make credit checks or examine a borrower's credit history. Since hard money lenders don't use a traditional standard process but evaluate each loan on a case-by-case basis, applicants can often negotiate adjustments regarding the repayment schedule for their loan. Borrowers can angle for more opportunities to pay back the loan during the window of time available to them. Some cons to consider are, since the property itself is used as the only protection against default, hard money loans usually have lower loan-to-value ratios than traditional loans do. Their interest rates tend to be high. The rates can be even higher than those of subprime loans. Another drawback is the hard money loan lenders might elect not to provide financing for an owner's occupied residence because of regulatory oversight and compliance rules. Seller financing. Seller financing is a real estate agreement in which the seller handles the mortgage process instead of a financial institution. Instead of applying for a conventional bank mortgage, the buyer signs a mortgage with the seller. Is that the same thing as owner financing? Wait, yes, it actually is. Nice job. Yeah, I know some stuff sometimes. Buyers attracted to seller financing are often those finding it difficult to get into conventional loan, perhaps due to poor credit. Unlike a bank mortgage, seller financing typically involves few or none closing costs and may not require an appraisal. Sellers are often more flexible than a bank in the amount of down payment. Also, the seller financing process is much faster, often settling it within a week. For sellers, financing the buyer's mortgage can make it much easier to sell a house. During a down real estate market and when credit is tight, buyers can prefer seller financing. Sellers can expect to get a premium for offering up to finance. Okay, so what does that mean? This pretty much means that they are more likely to get their asking price. Seller financing rises and falls in popularity along with the overall tightness of the credit market. During times when banks are at risk and reluctant to lend money to anyone but the most creditworthy borrowers, seller financing can make it possible for many more people to buy homes. Seller financing may also make it easier to sell a home. Wholesaling. Real estate wholesaling is a legal strategy you can use to your advantage without ever having to offer purchase or put down down payment. In real estate, wholesalers contracts a home with a seller, then finds an interested party to buy it. How does someone make money off of that? Well, a wholesaler will contract a home with a buyer for a higher price than he contracts the home with the seller, and he'll keep the profit. Wholesalers generally find and contract distressed properties. It's a short-term business strategy for investors. The goal in real estate wholesaling is to sell the home to an interested party before the contract with the original homeowner closes. What does that mean? Well, This means no money exchanges hands between the wholesaler and the seller, not at least until the buyer is found by the wholesaler. Wholesaling real estate is best suited for people who want to get into the business but don't want to have to finance. One of the best things is that you don't need to take a course, pass an exam, or get a real estate license to become a wholesaler. If you have great people skills and are fairly patient, wholesaling may be right for you. For me? Yeah, for you. Wholesaling isn't for everyone though. It requires a lot of time, commitment, and patience. You also need to have great communication skills and marketing skills. It doesn't hurt if you have a network of investors at your disposal who may be interested in buying potential properties. Finding the right kind of property is the first key to wholesaling. Homeowners who have distressed properties and are eager to sell, these properties can be very attractive for potential investors, especially if they are in the right location, come with an already desirable features, and have the right price attached. Before you make an offer, you'll want to review what kinds of repairs and additions the home will need. Knowing what kind of offer to make really helps. If you go too low, you may scare a potential seller. But if you go too high, you may not be able to find a buyer that's willing to pay. The key to wholesaling is, here, I'll tell you the secret. Ooh. Add a contingency to the purchase contract that allows the wholesaler to back out of the deal if he is unable to find a buyer before the expected closing date. This limits the wholesaler's risk. Home equity loans. If I need money to cover life expenses like real estate, what should I do? Tapping into the equity of your house might be a smart option. How do I do that? By getting into home equity loans. A home equity loan is often referred to as a second mortgage because that's truly what it is. It's a loan that lets you borrow against the value of your home. Often, this type of loan can be a way for homeowners to access large sums of money to pay for life's big expenses. It's not uncommon to see someone take out a home equity loan to finance home improvements, to cover medical debts, or to assist a child in paying for his or her education. Home equity loans are often an attractive source of funding because they are available at smaller interest rates than credit cards or personal loans. However, be aware that those low interest rates come with a high amount of risk. Lenders feel comfortable offering low rates because their loans are secured by your home, meaning that lenders can foreclose you if they decide to stop making your payments. What? How does this work? Put simply, home equity loans work in much of the same way that your first mortgage did when you initially bought your house. The money from the loan is dispersed at a lump sum, allowing you to use it as you see fit. After you receive it, you start making fixed monthly payments to pay back the loan. Okay, so that's a wrap for this video. What? Are you serious? So soon? Yeah, I'm sorry. I know you're enjoying it, learning a lot. But I have some things to remind you. Remember, you have to comment your ideas below so that I can review them and potentially make another video with them in it. Also, remember to like this video, please. It makes me so happy and it makes the algorithm happy. Also, subscribe for your sake so that you keep up to date on the videos. Yeah, but Kobe, I'm just not ready for you to leave and stop watching videos. Well, I do have a solution for that. If you're not ready to leave, I do have a bunch of videos on my channel that you can go check out and we can hang out. So go ahead and check out those videos. And remember, like, comment, subscribe. Thanks for watching. See you next time.